technical analysis. Today I'm here with George and Tone. Hey guys, how's it going?
Good, thanks. How are you?
Yeah,
I'm
going
well,
great.
thanks. Yeah, great. Yeah, so we had a little bit of movement in the Bitcoin market today, and we're coming up to the so-called Bitcoin Black Friday or the Black Friday this Friday, Thanksgiving weekend. And also, George, you just said that there is a Fed announcement on Monday. It's not a major announcement, it's not a main meeting, but there is something going on. So there's some activities in the market. What do you have today?
Yeah, so I'll just look at Bitcoin first, and I have a 4-hour chart up. We're still plugging away in this consolidation zone here, above the bottom, but below, resistance. Right now, 331, which is that 50-day, seems to be giving the price some trouble. If we get above there, I could see I put some fib lines up, probably get up to 348. And then we could start to look at upside from there. But right now it's still stuck in this range. Had a nice little move today on the 4 hour. It's a couple of good green candles there. RSI and commodity channel index are both signaling bullish here. So looks like it's going to try and break through. Then here's the weekly, and the weekly continues to look pretty bullish. I mean, overall, we're still consolidating above, where we should be, above 300, and now above that 315 area. This has really always been the key for me in the last couple of weeks. It's kept me leaning more bullish than bearish, is because the RSI has stayed in a positive position, and so has the money flow index, and you've been above your 100-week and 50-week moving averages as well. So, I mean, I'm nothing to get really super excited about here, but price is starting to trend up a little bit, and if we get above some levels, maybe we'll see a little run up here into Black Friday. Next chart I have is the U.S. dollar index, and we've talked about this already a bunch of times, and it's right back at that level, little below that top in March. But if it breaks up from there, we can start to see it run a little bit. But um, there's always talk, like when the Fed raises for the first time, which is looking more likely, that you could get a short-term peak in the price. But some of the indicators are kind of looking that way too. They're starting to flatten out a bit, like the MACD and the RSI even too. It's giving you a little bit of a negative divergence. So, while it's looking really bullish, we might get a little bit of a pause here with potential to go down for a bit. And another thing that makes me think about where we are with commodities in the U.S. dollars, I see headlines like this: if China killed the commodity supercycle, the Fed is about to bury it. And that kind of makes me think contrarian and think to myself, are we getting closer to commodities continuing to go really low when they're already oversold or not? And in this chart right here, this goes back to 1966, and this is the commodity, the CRB, which is that index that I look at all the time of a bunch of commodities, and it's at major, 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 major support going back to 1972. So, I mean, I'd have to think that at some point there's a bounce coming, and it'll be a really hard bounce, more than it would be something where we continue to sink and sink and sink. This is also oil. Oil is in exactly the same spot. This goes back to 1986, as you can see. That's 2004, 2006, and then right today. So, I mean, falling below this for both of these levels, you're going to just vacuum down. And I don't know. I don't see that that's going to happen after the kind of moves that we've had to the downside. I would at least expect some kind of reversal before. I'm not saying that it's going to go really high. I mean, anything that you would buy would probably need to be rented because there's major resistance overhead. And then this is just looking at oil again and some of those support levels below where we are. Right now, it's massively oversold, and you have these levels down here as far down as 20. And this goes back to 1981. So, with the thing going on in Russia, maybe a little support there. We got a little bit of a bounce, but I think maybe with the first Fed rate hike, counterintuitively, it signals maybe a bottom, at least in commodities, for a while. Also, China's been a big pressure on that as well. And so here's interest rates again. The 10-year, started to rocket up. It's still above support levels. Looks like it might be getting a golden cross here. 50 looks like it's about to cross the 200, and it's come back off a little bit. So the higher interest rates aren't really reacting as strongly as, say, like the shorter term, which is like the 1 year, which is massively overbought, and has had a big, large move. The 2 year looks pretty much the same as this. So to me, that means that a rate hike is getting really priced in at this point. And I think that Monday's announcement might be something along the lines of the discount rate being raised, which is a little bit different than the key interest rates. But you know, uh, things are starting to look like that's going to be the possibility, and maybe the market is starting to price in those events, and we'll see reversals in some of these things as that happens. And then the last chart I just have is, while we're talking about China's economy shifting, and they're kind of like the reason why the commodity super cycle is starting to end, at least the demand side of it. China's left the game a lot, so now you're seeing less and less demand for certain things. But the Shanghai, which had its peak back in I guess it was like June or July, has started to actually improve again to a place where it's starting to look more viable. So while we're talking about commodities and Bitcoin all the time here, the Shanghai itself also has started to go back up, and coincidentally, some of these moves have been made right after the peak in the Bitcoin price as well. So that's pretty interesting to look at as well. This is a weekly chart, by the way, so that actually shows you that this is a really nice move that we're starting to see back to the upside here. And that's really all I have for today. Thank you.
Okay,
Okay,
great. That
great.
was
That
really
was really
interesting.
interesting.
Tone, what do you have for us today?
Yeah, those were I like those oil charts, George. Those were really really good. All right, I guess let's kick it off with Bitcoin first. This is my medium intermediate term Bitcoin chart. It's a daily graph, and it's using the Brave New Coin Liquid Index. We had that little bounce today, but I was looking at this yesterday, and you can see the formation of a descending triangle, and it does have that dip earlier this month where it fell to 300 and then quickly bounced back to 315. So that's what I'm looking at. I actually don't think we bottomed yet. I'm still a little bearish on it, but and mostly because we went exponential from around the 250 275 area, and the overbought condition. If you look at the RSI down at the bottom, and that RSI went overbought in mid-October. So that's when it became overbought. So if it's overbought in mid-October, that condition still needs to be relieved, and the RSI looks like it's flattened out. The MACD is still coming down. So I still think that there is some more downside in Bitcoin. Let's move on to other markets. I guess let me save oil for last. I'll talk about the S&P 500. I zoomed in a little bit. I'm not showing the big dip in August like I did in my previous charts. So this is what we're looking at right now, and basically this is indecision. This is indecision at the top. And I think this has a lot to do with the Fed interest rates, because nobody knows what they're going to do, and the Fed doesn't know what they're going to do. I believe that they don't. Whatever they do on Monday, they'll probably figure that out Sunday night, and whatever they're going to do on the 14th, I think, they'll also make that decision later on. So this indecision is what people are waiting for. People are waiting for the Fed to make a call. So there's really not much to advise. I mean, what is the market going to do? Now, my view is the stock market will do whatever it wants to do regardless of the Fed rates. I think it has absolutely zero effect on the stock market. And I will repeat this because there will be comments. Whatever the Fed does will have nothing to do on the stock market, intermediate or long term. Yes, people will panic. especially if they do the unexpected, which is hard to say what the unexpected is anymore. um, People on the financial news channels, the talking heads, are going to speculate what it's going to do to the market. It's not going to do anything. There will be short-term panic, a week max, and then the stock market is going to continue the trend it's been on. So what you have to determine is, what is that trend? So this right here is our rebound high, right at 2100. That is not the all-time high. That happened earlier this year. So if we break out of this area, I think we're going a lot higher. Again, that's my opinion. That's where the stock market will be headed. But it depends on what the Fed does. And it's not even what the Fed does. It's what the initial reaction is. The market can jump if the Fed raises. The market can jump if the Fed lowers. Same thing on the downside. The initial reaction is not important. It's going to be the trend after a few days or a week of absorbing the information and what it really means. And a quarter interest rate means absolutely nothing for the stock market. It does mean something for the government bond market, but we're not talking about that. We're talking about the stock market. So that's my view on that, and I'll mention Fed rates in particular towards the end. Let's take a look at gold. No, that's oil. Gold. Here we go. So again, you see the same exact thing. You have this base right here. So I believe last time we did this video, it was on that this candle was forming, or the day before this candle was forming. And I said that I still saw downside for gold. This is a hammer, and then we went up, and then this is a shooting star, even though there wasn't much in between, and it's still red candles all the way down. And now we have this indecision. Again, nobody knows what the Fed's going to do, so no one really wants to do anything. Oil, I guess oil is having a little bit more volatility, but again, this volatility may have to do with all the problems with Russia and the Middle East, though Russia is not the one with problems, but they're definitely being baited into something. So again, this is a very classic reversal candlestick, but we need follow-through. We need a bullish momentum, and again, with the Fed rates coming up, I'm not expecting it. So I'm expecting more of the same into the Fed call. So there's really not much. If I'm asked to speculate on what the Fed's going to do, I'm going to say the Fed is going to raise rates, and here is my reasoning for it. The last few times we were doing these videos, and those listening, if you take a look at the comments, you see these very certain people that are so positive that the Fed will not raise rates. There are now so many people that are out there screaming that the Fed can't raise rates. What people need to understand about the markets is they usually do the opposite of what everybody thinks. So because I am constantly seeing comments that Fed will not raise rates, it makes me be the ultimate contrarian and say that they will. So just like George put up his commodities contrarian article, I'm saying the same thing, because almost every comment about what the Fed's going to do has been they can't raise rates. If that's what everyone is thinking, it's a safer bet to go in the opposite direction. And that's my primary reason for saying they're going to raise rates. And looking at the S&P 500, the fact that we are just under the rebound highs, and this happened, makes me think that people are contempt, and they would not panic, and they would be okay with the rise in rates. I think that's all I want to say. Is for commodities, and I was going to mention commodities. So George put up some really good charts that commodities are approaching like 20, 30-year support levels. But those charts are probably year-end closings. And while I do agree with him that those supports will hold on year-end basis because the year is almost over, I can certainly see a giant dip in commodities early next year, January, February, where everybody will panic, and we would go way below those lines, and then they would rebound by end of year. So I still see some downside in commodities and um, and a rise in the U.S. dollar. So that's pretty much my view on the economy and the markets.
Okay, thanks a lot, Tone. Yeah, I'm gonna tend to, even though I've also commented in the comments, and I think a month or two ago I said that on Twitter, George, that I don't think they're going to raise rates. I think if they do, I think they could raise rates, and it could just be a symbolic amount. It doesn't have to. I think that's also what people in the comments don't totally realize. They don't have to raise it by 1%. They could raise it by 0.1% or smaller.
Oh, they're not going to raise it by
And
1%. They'll
I know, but
quarter.
just to put it in perspective, I'm not sure if everybody gets that. You see what I mean? So I think that it could just be a very small amount, the raise, and that would have the effect that they wanted. And yeah, I like your contrarian attitude. I totally agree with that. Um, that's definitely true in a lot of markets. And actually, I just wanted to talk about Bitcoin today. And since we're coming up on so-called Black Friday, I pulled up the last few Black Fridays because there's a lot of people that say coming into this week, a lot of people said, yeah, I'm sure the Bitcoin price is going to go down because Black Friday is coming and everyone sells off on Black Friday. So I thought, okay, well, let's just check out what happened the last Black Fridays and see how that is. Of course, just before I made the charts, excuse me, just after I made the charts, the price did go up a little bit, as George and Tone showed us, but nonetheless, I think this is still relevant. So here in 2013, of course, we know what happened in 2013. The price just kept on going up during Bitcoin Friday, but the day after it, leveled out, had the all-time high, and then 2 days after it had the big dump. So, or one at the start of one of the big dumps. So, that's what happened. Now, if that's really because of Black Friday and people buying a bunch of stuff with Bitcoin and then merchants selling it, I don't know. I'm not willing to say that, but that's still interesting, I think. So let's go to then 2014. So in 2014, you had something totally different. You had selling off into Bitcoin Friday and then a big bounce, and it closed, significant amount above the daily open. So that's not exactly, I mean, it did sell off, but there was a lot of volatility that day. And then, coming into this Bitcoin Friday, this is this morning my time, before the little move up we had today. So, within those lines is the upcoming Friday. And, we had this big movement. Well, this is one of the, movements up that we had recently. And you can see consolidation. It's kind of dripping down on this chart. But you can also see these big wicks where a lot of the sell-offs were bought up. And then again, to get the picture of where we were at 500, here you can see where we are right now. It looks like there was a lot of selling. So if we found a bottom here above 300 for now, I don't know. But I think that definitely on Friday or on this coming weekend, I would expect to see even more volatility than what we've had the last week or two. And that's all I've got for today. Thanks a lot for watching. Also, I want to mention one more thing I did forget. Despite, George, you brought up the US dollar index.
Yep.
And so, yeah, even though despite the US dollar is surging, Bitcoin didn't really sell off because, this is Bitcoin slash US dollar. So that that's a lot of what is fueling this. Commodities are really weak and so on because U.S. dollar is so strong. But Bitcoin hasn't gone down because of that. It
Yeah,
seems that so
I
far.
don't
What do you
see a
think,
big
Tone?
I don't see a big correlation there between the
Okay.
value of the US dollar and Bitcoin. People have to realize Bitcoin is its own economy. It's really not dependent uh, on strength of some currency versus others, right? Because you can say, yeah, the U.S. dollar is going up, but the euro is going down. So maybe there are buyers leaving the euro and wanting to transfer into Bitcoin.
Yeah.
Just because it's priced in U.S. dollars, it's not like that because it doesn't have to be globally priced in U.S. dollars. Um, so that's it's not traded in only U.S. dollars. Is the I guess is the question.
Oh yeah,
So
sure, definitely. Well, I can agree with you somewhat, but I think it does matter some. I mean, I'll notice I do watch the Euro Bitcoin price, and you will see different movements when there is a big Euro sell-off. But that's probably like what you were saying, because people are willing to buy into Bitcoin because they see the euro, crashing against U.S. dollar, so they're
yeah, that's
willing
the
to
thing.
buy
I think
Bitcoin.
if
But
the
it's not really dramatic. It's still
yeah,
pretty low volume compared to U.S. dollar or Bitcoin volume.
I think if the currency starts to crash and it's noticeable, then it has an effect. Um, but the U.S. dollar going up, I mean, but again, George, and I are here in the U.S., so to us, it doesn't really have an effect. It just makes our life a little bit easier if we're traveling, but few people constantly travel. I just want to comment on Bitcoin Black Friday as well. I honestly don't see a correlation there either. I don't think it has any effect.
Right.
I'm not really expecting a bunch of people to go out and spending the Bitcoin because they'll probably have a lot better sales just spending dollars. It was interesting just today. I saw that my Chase Freedom card is now offering me 10% to shop at Amazon over the next 30 days. And I'm just thinking, whoa, that is really like Purse.io is losing its advantage right there, right? Because they're giving you like about 10 to 20%, but now I'm getting 10% cash back by using my Chase card at Amazon. So I actually think that fiat sales will trump anything that can be done in the Bitcoin space. And at current prices of Bitcoin, if you're sitting on enough Bitcoin that you really need to spend it and wait for sales, I just see that as a very, very small market. I mean, how many people are really waiting for that? I just don't see it having much of an effect at all.
Yeah. Well, it doesn't matter if it has a real effect. It matters if it has a perceived effect. And I think that
That is true. Yeah,
that's it. I think
it's
that's, in my
speculators. Yeah.
opinion, that's what it is. That's what's fueling the volatility on those days. I can't prove that there are or are not merchants selling off or people buying because they want to save in Bitcoin and so on and so forth. But there's definitely a lot of chatter going around about that, and I just
Oh
thought it
yeah,
was
no. Oh,
interesting.
I
I
totally
think
agree
it's
with
just perceived because even on and I really like that on in 2014. Let me find that one. I think that's what happened. That the people were ready to dump on that Friday, so they just sold off right into it.
Oh
Because
yeah. No,
they I think that's what happened. So let's see if it happens this year. I have no idea. Could.
yeah, that's what I was saying about the rise in prices in early this month. On that bubble to 500, I didn't see any mass adoption coming. I didn't see any fundamental demand for Bitcoins. There was absolutely no reason for it to go up like that, and we can see it now with the big drop in volume into the end of the month. So that was all just speculative trading on rumors of MMM and
Right.
Chinese capital controls or anything else. I think it was all speculation driven.
Could very well be. I think I tend to agree with you. Although the other you could have a bullish argument about is that there are way more Bitcoin that exist now than in 2013 or 2014. So even though the supply has increased, we still are above 300 right now. If that's
Well, yeah,
really a bullish argument, I don't know, but I think it's definitely something to think about when we're looking at the weekly charts. That every day there are a lot more Bitcoin that come onto the market, and we're still able to maintain X price.
Oh yeah, no, but that's because the demand has gone up. Back in 2013, there was nowhere to spend them.
True.
So
Yeah, that's
there,
true.
there were less
That's totally
Bitcoins.
true.
There was nowhere to spend them outside of some gray market areas. There was really no Bitcoin economy. I mean, how many people were getting paid in Bitcoin in 2013? I mean, what, 3 people maybe? Today, that's a lot more widespread. So the economy has definitely Bitcoin economy has definitely grew, and it's going to be very interesting at the next halving when we really start to crunch the supply of new Bitcoins.
That's true. That's around the corner. All right, everyone. Thanks for watching. Make sure to subscribe to this channel, World Crypto Network. Give us a thumbs up. Check out the links in the description. And talk to you soon.